In this video, we'll run you through the main types of mortgages and what you should consider when deciding which type to get. First off, what is the difference between an interest-only mortgage and a repayment mortgage? An interest-only mortgage means that you only pay back the interest each month to your lender. This means you'll have significantly lower monthly repayments, but it also means you're not paying back any of the capital, your mortgage debt, so the amount you owe to the lender doesn't reduce over time. A repayment mortgage is much more common. This means you are paying back both the interest and the capital back each month to your mortgage lender. Monthly repayments will be higher than with an interest-only mortgage, but at the end of your full mortgage term, you'll have paid back the whole lot. Now let's move on to the different types of mortgages, starting with a residential mortgage. A residential mortgage is a loan that you take out to purchase a property you plan to live in. In comparison, a buy-to-let mortgage is a loan you take out to buy a property you intend to rent out to other people, rather than live in yourself. A Help to Buy mortgage is a government scheme that helps first-time buyers get a home with just a 5% deposit. You would borrow 20% of the property price as an interest-free loan over 5 years. Unfortunately, the scheme is now closed to new applicants. However, there are private equity loans which are great alternatives to the Help to Buy scheme. Next, guarantor mortgages. A guarantor mortgage is when someone is willing to help you get on the property ladder by acting as a backup in case you cannot make your mortgage payments. However, they are not named on the deeds of the property and they won't own a share of the home. By using a guarantor, you can increase the amount you can borrow for a mortgage or help increase the chance of you being accepted by lenders, although this depends on you passing affordability checks. The good news is that guarantor mortgages come in different shapes and sizes. Your family doesn't need lump sums of cash to help you get a place to call home. We can help you work out which ones are best for you and your family. All you have to do is create a free Tembo plan to get started. So now you might have an idea of what mortgage types you might be after. Let's look at what factors affect the mortgage deal you could get. One of the biggest factors that determines what mortgage products will be available to you is how much you've saved up for a house deposit. Mortgage lenders typically expect you to put down between 5 and 20% of the property price as a house deposit. The rest will be made up by your mortgage. The bigger the house deposit you put down, the lower interest rates you can get access to. This is because lenders see you as less of a risky borrower because you've put down a larger down payment. In mortgage land, your deposit determines your loan to value, often shortened to LTV. If you put down a 5% deposit, your LTV would be 95%. If you put down a 20% deposit, your LTV would be 80%. The lower your loan to value, the lower interest rates lenders will be willing to offer you, making your monthly repayments cheaper. The next factor that impacts what mortgage deals you can get is how much you can borrow for a mortgage. Typically, mortgage lenders will let you borrow between 4 and 4.5 times your salary for a mortgage. If you are buying with someone else, like a partner, friend, sibling, or with a parent's help, how much you could borrow will be based on your collective salary. There are some schemes which allow you to borrow up to 5.5 times your salary, but these are limited to mortgages for those in professional careers, like doctors, nurses, teachers, and solicitors. You can get a 5.5 times income mortgage without working in a professional job, but you must earn over a certain amount, normally at least $35,000, and have an impeccable credit score. If you are struggling to borrow what you need for a mortgage, don't worry. There are lots of different buying schemes which can increase your mortgage affordability, which we're expert on at Tembo. This leads us on to our next factor which impacts the mortgage deals you can get: credit. When assessing you for a mortgage, a lender will use your credit history to determine how reliable you are with debt and whether you are likely to struggle to pay back your mortgage. If you have adverse credit, this can impact your ability to get a mortgage. There are also other restrictions. For example, it can be more complicated to get a mortgage if you're self-employed or on parental leave. We've left guides for both of these in the description below. The last thing to take into consideration is interest rates. Depending on what the market is like, you might be offered a higher interest rate than you were expecting, or potentially lower. During the pandemic, you could get a lower interest rate between 1 to 3%, but based on a 30-year average, rates this low are unusual, and a mortgage rate around 4% is much more typical. If you have an impeccable credit score, have a large deposit saved up, and a good wage, you'll be able to access lower interest rates than someone with a history of credit problems, for example. The lower the interest rates, the less the monthly repayments will be. You will also need to choose between a fixed rate and a variable rate mortgage. Which one you should choose depends on how you feel about risk and what the market is like. If you go for a fixed rate mortgage, meaning your interest rate will be the same each month for a set number of years, you could end up paying less if mortgage rates go up. If they go down, you'll end up paying more than you would have done on a variable rate. This is because you are tied into paying the same interest rate for a fixed amount of time, regardless of what the market is doing. If you're worried about how you can get on the market or are confused about how to get the mortgage you need, talk to Tembo. It's our mission to help buyers boost their mortgage affordability so they can get on the ladder sooner. We've already helped thousands of buyers discover how they could buy their dream home. In fact, on average, our customers boost their budgets by up to £82,000. So whether you need help boosting your deposit or want to explore what buying schemes could be open to you, head over to tembomoney.com to get started.